Well, welcome everybody to Mastering Multi-Account Trading with our special guest tonight, Shawn Lucas. Now, we know we have a lot of people coming in today. A lot of you guys are new, and so welcome to those of you guys who are new, and hello to all of our friends returning each and every week to our Wednesday night classes that are generally brought to you by you. And we are excited once again to have Shawn Lucas present Mastering the Art of Multi-Account Trading. Now, as we're getting everybody in and everybody's coming in, I just want to kind of introduce to you guys what we have going on. Some of you guys may or may not be aware of our community that we have, our Discord community, which is a free community, and we just built it as a place for all the traders to come together and help each other trade. We do trade every day. And I'd like to take just a quick minute as everybody's coming in to go over what Discord is, because it might be new to some of you guys, and just how to quickly navigate and maximize the most out of our free community that is here to help you to be a better trader. So let's dive in. As you come into Discord, your best thing that you're going to learn to love is this little inbox thing right here. This little inbox thing for you. Up here is anything that is going on, anything that is happening. Like right now, there's an event that's happening, and this is where those events are. And so if you wanted to join the event, you would click on this. And if it wasn't already happening, there would be an interested button. You would click on that and it would pop up and remind you where it's at. And so those are the things that we have from time to time at different events. Then you have mentions. If anybody mentions your name anywhere across the server, it takes you right there. So you don't need to navigate. So you don't have to scroll through and try and find if anybody's talking about you. There's a couple of things I want to point out really quick, and that is trade talk. If you are in here and you'll start getting a ton of notifications, I would highly recommend that you mute it basically, because there's a lot of people talking all the time. You don't want to get hit with notifications. But feel free to jump in. As we were trading the FOMC, everybody was saying, hey, it's going to do this. And then we do a lot of trade talk all day long, all day, every day, trade every day. We encourage people to post 1%. If they hit 1% a day, that's what we're encouraging. They post their trades here and they start hitting the 1% in trade talk. And we start talking about different things. One of the things that I just recently added to our Discord channel, and unfortunately we needed to add this, as there's a lot of nefarious scam people out there, not just on Discord, but out there in the world today. We see that on Instagram, Facebook, all over the place, where people are trying to impersonate Shawn and now even myself. And so the best thing to protect ourselves is for me to always bring you guys to the forefront of the latest and greatest scam that's out there. Just a couple things on scams that are going out there. I'm not going to go out of my way to direct message you about a product that is not on the server. So if you guys don't see a product on the server that I've been talking about, that everybody's talking about, like the most common one that is going around are two things right now, where I'm going to sell you a indicator or a robot that's going to do 100% of your trading for you guys. I don't believe in that. I don't believe that there's anything like that exists. So please don't buy it, because I won't be talking to you about it. And then of course, Bitcoin. Or crypto. That's a big scam that's going on around right now. What you guys can always do is come in here and check this scam alert. One of the things, if you get hit up by me just out of the blue, double check the last numbers. My number, and it's only me, is 6284. So if you see a DM that you're like, is this really him? If it says 6284, it's really me. If it doesn't, there's people that are impersonating me that join our server and use my name. Like somebody that joined today at 2 a.m. using my name, and then they hit you guys up and try to sell you something. Unfortunately, that happens, but I would never hit you up in the middle of the night because I'm sleeping. So just make sure you guys are practicing good and safe rules. Does this sound like something David would be saying? If not, always confirm with me before you buy anything, again, that is not being on our server or on our websites, that you're like, hey, is this a new product? Well, ask me. The reason why Shawn I've asked him to come in is every Wednesday night we do a presentation. Like I said, Josh Hunter presented last week. We take those and we upload those to YouTube. Those actually live here where you see the YouTube drops. You can see all the different traders that teach on Wednesday night. You can go through there and look at that. We also have hot seat trading. There's the hot seat recordings. Every single day we trade with you, and we post those recordings right here. And something that I was just talking about, the reason why I said, hey, Shawn, this would be really great is because with the Apiary Fund, we've introduced another way or a multiple way to have a funded account, and that's the growth challenge. I'm not really going to talk a lot about it, but if you want to learn more about it, you can take the challenge right here. But it is another funded account that you have to manage, hence mastering the art of multi-account trading with Shawn Lucas, right? And so that's how you navigate. If you want more information about the growth challenge, then they have fast track courses, all that kind of stuff. So navigation is over here on the left. All that kind of stuff is in the community of Discord. So welcome everybody who is brand new to maybe our server or brand new to Discord. It's just basically a free place where we can go, come hang out, and everybody can just start to trade as a community. So we welcome everybody, and hopefully you guys will continue to join us. Let me introduce to you guys tonight's guest speaker, a man that probably needs no introduction, but he's my personal friend. He's my trading mentor. I was just telling everybody at the boot camp the story of when I had my major aha moment, and that was on the journey down to have our first episode of Trader on the Street that we ever cut in Las Vegas. I had the privilege and honor to film that session. And on the way down, Shawn told me, well, Dave, you're driving because I got to figure out how I can make 1% or not one. He didn't say 1%, but I got to figure out how I can make money in 1 hour. That was our goal, was to make more money in 1 hour than the average American makes in an entire day. And Shawn's like, well, I got to figure out how to do this because I can't control the market. I don't know if we're going to have volatility, or we're not going to have volatility, what the market conditions are not, but I only have an hour to do this. And so Shawn's like, Dave, you drive. I'm going to start putting together some plans in place. So we drove all the way down there. And by the time he got down there, he had a plan in place and he knew how he was going to trade. Obviously he didn't share that with me, or it didn't at that point, because I just wasn't a good trader. And I had the privilege and honor to be on the other side of the camera lens and to watch him through the lens of the camera trade. And I told him, I don't know if you remember this, but as soon as we got done and we kind of debriefed our session, how did that go? The first session, it's like, Shawn, I have never seen you trade like that in my life. And this was like 4 or 5 years into watching him trade. And he's like, really? He's like, really? I'm like, that is the way that I want to trade. And that was my big aha moment in trading. That was like the catalyst that got me to where I'm at today. And that turned into what everybody knows and loves today is the wobble technique. Obviously, that was the beginning of it and the basic of it. And if you guys haven't seen those videos, a little cheesy, but we love them, where I actually took Shawn out to the mountains and interviewed him and said, how do you trade like that? I want to learn. And he was gracious and kind enough to kind of do that on camera, and said, because I had my market, I'm like, I don't want to learn, I want to teach it. And so that was kind of my introduction, really my aha moment of trading. And since then, I don't even remember how many years ago that was, but since then, had the opportunity to really dive in and learn from Shawn. So again, enough about me. Let me introduce Shawn Lucas, if he's there. Are you there? I don't see your camera. So okay, I was stalling, but no, just kidding. So again, Madden needs no introduction. Here he is, the man, the myth, and sometimes a legend. Because
Legend of what?
it depends on it depends on the Instagram story that somebody wants to make up.
Legend of something. Huh?
Legend of something.
Well, awesome. Hey, thank you, David, and appreciate this opportunity to chat with everyone tonight and kind of talk a little bit about trading multiple accounts. And just to clarify, that wasn't the start of the wobble. And that trip down there,
for me it was. For me it was.
That for many, many, many years. I just didn't want to show you in the beginning because I didn't unleash the beast.
Well, you did. That was my start.
Great to be with you tonight. I'm going to chat just a little bit about managing multiple accounts. And this again is something that's probably relatively a new concept to a lot of you. I don't know that we really talk about it at Apiary Fund, even though it's a principle that we employ as we are managing the fund behind the scenes. So account multiplicity. Anybody seen this movie? Love this movie. It is absolutely hilarious. And I know that dates me. I know that this is, back in the 1980s or something like that. So this is like long, the way back machine here. But the gist of this movie is that the character, I get Michael Keaton. I don't even know what his character's name is. He basically he's like wishes that he could duplicate himself. He's like, oh man, if I could just duplicate myself, I could just like blah 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 blah. And so somehow he figures out how to create duplicates of himself, and it's just like the whole movie is like another duplicate pops up, and it's a different character, it's a different hilarious. So um, I think that we can name these accounts. This account over here is Apiary trading account for the Monday growth or the Monday guest traders, and this is over here. So, any rate, we're going to talk a little bit about multiple accounts and managing multiple accounts because it's an important function. I think that at least I use in my trading every day. Before we get too far down the path here, though, a little quote from J.R.R. Tolkien: "A little by little, one travels far." And what we do here at Apiary Fund and Trader on the Street, we live by this concept of managing a little. Everybody does a little bit, and collectively, we're doing a lot. I don't know that any one of us trades a huge account, what I would call a huge account at Apiary Fund. Nobody's trading $1 million account, myself included. I choose not to trade that type of account. Instead, what we do is we break it up into little chunks, a $25,000 account, a $50,000 account, a $100,000 account, a 150, a 200. And then we give each other the ability to manage that independently and uniquely. What that does is it brings an enormous amount of diversification into the fund. Typically, when you look at diversification, you put a little bit of your investments in basket A, a little bit in basket B, a little bit in basket C, and voila, you have diversification because if A goes up and B goes down and C goes up, then collectively you're up, right? What we don't talk about and what the industry doesn't talk about is diversification through strategies and through traders and through different styles of trading, which is a really unique concept. In fact, I don't know that there's any books written on it. I don't know that anyone's gone in and done a deep dive in terms of, how that creates a diversification model where there's loads and loads of PhD articles on how to diversify through different instruments or different investments. But it's the same concept, right? When Larry goes in and places a trade, Ed is over on the other side placing a different trade. They both have different time objectives, how long they're going to be holding on to those trades. They both have different risk levels, how much risk they're willing to take in that trade. And collectively, we build essentially what I consider to be a small market, just like the Dow Jones Industrials or the Nasdaq or the S&P, because what those indexes are doing is they are being managed by hands all across the world, every single hand doing, their own thing and their own reasons and their own whys. And if you look at historically, that that index just performs great historically, year after year after year after year, until the Fed raises rates and it all goes down. Um, so essentially what we're doing there is we're creating a small market, a small index here at Apiary Fund or the bigger fund behind the accounts that you trade. And we're not small. I mean, we collectively, individually, we all do our little by little, but collectively process nearly $650 million in trades every day. Uh, I mean, that's staggering, right? Um, been as high. We haven't broken the billion dollar day yet, but I imagine we will at one of these points. But that's fascinating. It's really cool to think that, little by little, each one of us doing a little piece, a part, and we're able to push that much volume through the financial markets. So why this concept of trading multiple accounts? Several uh, so back in during the COVID, yeah, that that kind of changed everything about our world. We had an experience at Apiary Fund where a lot of traders, left. Um, it's not to say that was trading bad. What the issue was is that a lot of those accounts were in the negative. They were in the hole. And we have this concept, this principle that we live by, which is a universal principle for traders. You basically, in order to get paid, in order to get compensated, you have a high watermark in an account. So the account grows to this point, you draw it down. Well, in order to get paid, you have to grow it back up and then a little bit, and then you can get paid on the amount over your base funding level, your high watermark. And that is across the board. Every trading floor on the planet has that kind of a structure to it because nobody wants to pay a trader who loses money and then makes it back, or they don't want to make it. They don't want to spend money that they made back. They want to make sure that that trader is progressing, pushing the fund. And so that's how we set up Apiary Fund. Um, the challenge is that psychologically there's some issues with that. There's some real, once you get into a drawdown, your amount of work that it takes to get yourself out of that drawdown, it can be tiresome. And it can be psychologically challenging, right? Because you're like, oh, all this work and I'm in the hole, and today I'm not getting paid, tomorrow I'm not getting paid, and until I can get that account back up, I'm not getting paid. And so when COVID hit, I think a lot of those, feelings were amplified. And so we had a pretty significant uh, exodus from the fund. And up until that point, that I was aware of the issue, and I was concerned about the issue of the high water mark, and but how do you get around? This is a problem that I started noodling on, and I, and how do you resolve that problem? It dawned on me that when I trade, I've got multiple accounts. Like, you'll watch me trade an Apiary Fund account here, but very often in the very same trading session that I'm trading with you in live, I'm trading in an interactive brokers, and I've got a futures position on the trade, or I've got another Forex account somewhere that I'll be throwing trades on at the same time. And the reason I do that, there are three primary reasons why I'll do that. Number one is because of institutional risk. You may not have experienced this, but I've actually lost more accounts. I've lost more accounts and burned more accounts because the institution has gone out of business, or at least gone into bankruptcy, than I have because I've lost all my money trading. Does that make sense? So I've probably had a half a dozen accounts go belly up, not because I traded badly, but because the institution that I was trading with was mismanaged. So that's one of the first reasons why I like to trade multiple accounts, because I never want, I'll tell you the story here in just a minute, but I'd never want all my money in the same institution. Behind the scenes here at Apiary Fund, we, one of the first things that we did when we went out and built the Apiary Fund structure is we went out and identified a total of 3 different liquidity providers, banking institutions that we wanted to deal directly with. And so we went out, and over the course of the first couple of years, 3 years, set up arrangements and with each of these different banking institutions, and then we'll route trades accordingly. So some of your trades will go to bank A, some of your trades will go to bank B, some of them will go to bank C, and you'll actually see that. And you'll hear that because, sometimes during our trading sessions, you're like, hey, you got filled, or hey, I got a gap and you don't have a gap. The reason why is because you're connected possibly to a different bank or a different liquidity provider. The second reason why I like to trade multiple accounts is because of liquidity itself. So I'll get into an explanation here in just a minute, but as a general rule, whenever you open up an account at a broker, that broker will give you a certain amount of liquidity. They'll give you a 50-to-1 margin, or they'll give you, they'll say that you can trade, X amount. In reality, that broker also has a liquidity limitations on, he's given liquidity. And so they may give you the ability to trade up to $15 million per point, right? But in reality, that broker only has the ability to trade, maybe $25 million per point, or maybe only 15 million per point. And so across the entire universe of that brokerage house, they're only able to facilitate about 12 to $15 million of liquidity per point in the market. And so what that means is that, if we all start to jump on the same trade, well, that's very possible that we could start to drive the price up on ourselves. Within our small network, we could drive ourselves or drive the price up on ourselves within the small market network, even though the rest of the market is not going up. Does that make sense? We can create an illiquidity problem right within our network. So it's an important function to distribute that risk across multiple accounts. And then the third thing is for diversification, which we've talked a little bit about, but the concept is if I have an account here, I may want to trade it one style of trading. I may want to trade a different style of trading over here. And especially in the United States with retail brokerage accounts, that's not possible because you may have long positions over here while you have short positions over here. And they can't coexist in the same account because of FIFO rules or hedging issues. So those are really the three big issues, the three primary reasons why I'll diversify my portfolio out into multiple accounts. And then the final thing here is aggressive passive trading. So not passive aggressive trading, but aggressive passive trading. So one of the things that what we'll want to do is, in order to make money, is we want to trade large. We want to trade big, right? We go big through a lot of small pieces here, but ultimately I go big, right? I have to go big if I want to make money. The only way to make more money, the concept is we want to trade the exact same way today, tomorrow, the next day, right? And it doesn't matter if I'm managing a $10,000 account, a $50,000 account, $1 million account. I want to trade the same way. The only difference being how much I'm allocating to each position, right? Each trade. Obviously, if you're trading a larger account, you can allocate more money to that trade, or more positions to that trade. And you can get bigger lot sizes because that's how you make money, right? It's very hard to make money if all you're doing is placing one trade and getting 2 pips at a time, in a day. You're never going to grow out of, the penny returns. You're going to have to get up into the dollar returns. And to do that, you have to trade larger lot sizes, right? And so by diversifying your accounts, I'm able to trade very aggressively in one account and more passively in another account. Does that make sense? So I may be trading, 30, 40, 50 lots in this account, and I may only be trading, 2 or 3 lots over in this other account. So, but collectively across the whole, I'm being very aggressive and making really big money, hopefully, and being safe and secure and passive on the other money. Does that make sense? And so that what that does is it creates a profile, a return profile for you where you can start to, you can get returns, 1% return, 2% return every day. And where, the best traders on Wall Street can't do that, right? I very rarely will you find a trading floor where everybody performs at 1% or 2% a day. And they just can't do it because they don't trade the right account sizes, and they're trading too big of money. There's not enough liquidity. They can't execute multiple strategies at the same time. So those are the primary reasons. Now, let me just tell you, I'm going to tell you a little story. Back in the, I was very fortunate enough to make some really good money back in 2005, 2006. And so I essentially left the industry and started managing my own book, and just completely living off of the investments that I was managing. And I had a little bit of money at FXCM and a lot of money at Gain Capital. I don't know if you're familiar with either of these brokerages, but I was familiar and knew the principals over at Gain Capital, and they were great guys. And so I opened up a pretty sizable account there and just traded it. They gave me some great benefits for trading there. And then along comes, the whole 2007, 2008 debacle, and literally like dominoes, like dominoes. I think FXCM was one of the first, or there was a bunch of little tiny companies, but ultimately FXCM was one of the first big companies to say, hey, we're in trouble. The markets have just been terrible. We're over, we've allowed too many positions to be taken. We've over allocated positions based on our liquidity. Markets have turned. We're not making money. And so they were one of the first to essentially declare bankruptcy. And I had started hearing rumors that Gain Capital was also in trouble. And in fact, I had my account frozen at FXCM. And so in kind of like being a little bit nervous, I'm just going through the process of how do I pull this sizable chunk of money out of Gain Capital, and where do I put it? Where am I going to put it? And so I'm going through that process, trying to figure all that out. And then I got notice that Gain Capital had frozen all of their assets. Now, that's a pretty rough situation. I had two accounts frozen. FXCM wasn't a large account, but Gain Capital was. And that's how I was, that was the primary account that I was using to trade. And, and then all those questions, am I going to get my money back? And so, the regulators come in, they start doing all the financial audits and everything like that. And so anyway, it was several months before I even knew what was happening, and whether I was going to get my money back. Now, if all my eggs were in that Gain Capital account, I would have been in trouble, right? I would not have had an ability to make an income. Fortunately, I had other accounts. I had accounts at Apiary. I had accounts at Interactive Brokers. I had accounts at different places. And so, I was still able to make a good income, even though a good chunk of my capital was frozen at King Capital. In fact, if you look at historic history, Dodd-Frank legislation came in and completely devastated the currency market in the United States, completely devastated it. They basically, because a lot of these companies were offering, 200 to 1 leverage, 500 to 1 leverage, 1,000 to 1 leverage. Dodd-Frank legislation came in and said that's the problem right there. You're giving your traders too much leverage. And so all of you companies that are, declaring bankruptcy, that's the problem. And so what we're going to do to fix this is we're going to only let the industry, if you want to run a currency brokerage in the United States, you can only offer 50 to 1 leverage. And then behind the scenes, what was even more detrimental is that they said you had to have, a certain amount of reserves on deposit, and the minimum being $100 million reserve. And so, we had about 87 brokerages in the currencies market prior to the 2007. After 2008 Dodd-Frank legislation, we dropped down to less than 10. And so it just destroyed the entire industry. And so I learned a huge lesson from that, right? When you're sitting on, a several $1 million account that's frozen, and you're looking at it and you're saying, oh my gosh, am I even going to get my money back? That's pretty harsh, right? So fast forward a little bit to 2009, and Nate and I are testing out a model for the Apiary Fund, what became the Apiary Fund. And again, one of my immediate rules is we're not going to put this money into a single institution. We're going to diversify that institution. We're going to make sure that we have, multiple places that are housing that money. And that's become a rule for me to always diversify the institutions, because you never know. The regulatory climate can change, and they can, randomly say, no more 200 to 1 leverage, no more 100 to 1 leverage, and then you're done, right? The opportunity is gone. And so it's just good practice to diversify away from that institutional risk. The liquidity. Let's talk a little bit about liquidity for a moment. I actually don't have that slide up. So I mentioned before, in the currencies markets, it's kind of just a good rule of thumb to think that you have to kind of assume that you have about 10 to $15 million of liquidity per point, right? So when you go and open up your own brokerage account, I hope the day comes where you could personally work through a 10 to $15 million worth of liquidity. That would be fantastic. That would be great. I hope that happens for each one of you. But it's not individual. It's collectively, right? It's across the entire universe of the traders that are at that brokerage. And when you start to look at liquidity through that lens, all of a sudden you start to ask yourself, wait, how liquid really is this broker, right? How liquid is this market? The market collectively is very liquid. It's the most liquid market on the planet, right? And that's what we understand. But what we don't understand is the liquidity at the broker level may not be as liquid. And furthermore, each broker has different amounts of liquidity. So you can think of a broker very similar to the way you operate. That broker has to go and find a liquidity pool, right? So they go out and they set up accounts at what's called a prime broker or a prime of prime brokers. So they go open up an account at a prime or a prime of primes, and then that prime broker gives them a certain amount of liquidity, right? And then they turn around and say, hey, everybody, Josh and Catherine, you guys have $15 million worth of liquidity per point. We're a very liquid organization. And then all of a sudden, we have one of those events where everybody goes the same direction, right? Everybody starts to go long the US, long the euro dollar, right? And we see huge movements in the pricing. Think about what happened with the Swiss National Bank. That Swiss National Bank overnight depegged from the euro dollar. And so all of that money that was pegged because of all of that money that was invested in the Swiss franc because of the peg to the euro dollar, all of a sudden exited, right? And that created a liquidity trap, a liquidity vacuum, and the market just tanked, right? So it's important that each one of you understand that when you go and open up an account at a broker, you and everybody else are competing for that liquidity. And so it makes sense to me, it makes sense to open up an account at broker A and an account at broker B, and then maybe even an account at broker C, because now I can distribute that. And if I've got to run on broker A, then I can still execute and manage, put a hedge on, a cross broker hedge on broker A. Does that make sense? So I'm losing money at broker A because of a liquidity event. I can hedge that off at broker B. So I'm losing money here, I'm making money at broker B. And so I've got a cross institutional hedge on my account. A really great thing, right? Really great thing. Another concern is that margin. So when a broker will give you margin on your account, so you can always buy more than you have in your account, right? You're not, the margin loan is between you and the broker, right? It's not a loan that you go out to a bank and you get a loan and they give you the money and there's like a clear terms of service and repayment structure and schedule. When you get margin from a broker, you're basically they're lending you the ability to trade that money. Okay. Meanwhile, that broker has a margin with the prime brokers, like the middlemen, right? And ultimately, the margin that broker is given is the ultimate margin. So they may say you have this much margin, but ultimately, when their margin is used up, your margin is used up, regardless if you used it or not. Does that make sense? You don't have access to that anymore because they're margined out. They've used up too much money. This has happened many times where a broker has become margin called because of the traders that are at that brokerage house. And so what happens there is that then they turn around and give margin calls to their broker or to their accounts to try and free up capital to meet their margin requirements. Again, this is not something you would readily know, if you're going out and opening up a bank account or a brokerage account, because it's not something that's really talked about in the industry. Furthermore, they have their fingers on the feeds that are coming through. So that broker can, if they wanted to, you know, they could raise the spread on Euro USD pricing, and they could make, instead of making a 0.4 pip spread or 0.4 pip spread, they can make a 10 pip spread, right? And you're none the wiser because you just have to take that. So that frees up, a certain amount of capital, then they can go and throw that back into their prime brokers. And so I guess the point to all of this is that there are some structural issues between liquidity, between margins, between at these brokerages, between trade structure at these brokerages that create a very compelling argument for opening accounts at different places. Does that make sense? Now, let me talk you a little bit about Apiary Fund, because I don't want to scare you too bad. Apiary Fund, when I go and I set up an account at a bank, I'm going in and I'm negotiating with that bank for a certain amount of transactional volume. So they sign an agreement with Apiary Fund, and they say, we will provide you 20 million, $10 billion worth of trade flow in a month. And Shawn, you have to promise me that you're going to use X percentage of that trade flow. Does that make sense? So that's how we negotiate from an institution like Apiary Fund and the bank. So we're going in and we're setting up these relationships where we're guaranteed a certain amount of trade flow. That's what a prime broker does. So that's what their whole purpose is. They go out and they say to the bank, look, we're gonna find brokers A, B, C, D, E. Broker A puts through this much volume, broker B puts through this much volume, broker C does this much volume, and D does this much volume. So we can promise you, bank, this much trade flow every month, because this is what our brokers out there are able to do. And so they'll set up an arrangement with the bank. That's exactly what Apiary Fund does. So we're guaranteed a certain amount of liquidity every month. Every month, start the new month, we're given a certain amount of liquidity. So one of the things Ron does is Ron monitors how much liquidity, how much trade flow we're pushing through the market. And every month we'll sit down in our risk management meetings and we'll say, hey, we're at 40% capacity, right? This month was a really busy month. We're at 52% capacity. And so we will manage that trade flow, that liquidity behind the scenes, so that we're able to make sure that we have enough liquidity to execute all those trades. Furthermore, the other great thing that we can do is that we can hedge across the different banking platforms. So if we get a little heavy in bank A, then we'll simply move a little bit of that flow over to bank C and over to bank B. And so we can start to manage that flow because we've got multiple accounts that we can work through. Does that make sense? So the point here is that that's what we do behind the scenes to help manage the risk, to help manage the liquidity, to help manage the institutional risk. And so we are practicing this concept of managing multiple accounts, even as I'm telling you that this is something you ought to consider in your own accounts. Okay, let's talk a little bit. How are we doing on who I'm talking too much. Let's talk a little bit about diversification. So by opening up multiple trading accounts, something really, you now have something very unique, because You can trade one account full time. You got options, right? You can trade one account full time, one account part time, and one account can be sitting there for a backup, right? So very often, like I said, I'll be trading with you in either the Thursday morning class or the Monday morning class. And at the very same time, I'm placing trades in other accounts. I'm just simply flipping back and forth between windows, putting a couple trades on, coming back in. And so I'm giving full-time attention to this account. And meanwhile, I'm getting part-time attention on the second account. So I take all the trades here and only the best trades here. Does that make sense? So sometimes you'll know this makes sense to you. You're putting in a position because you're not sure if it's going to turn here or if it's going to turn here or is going to turn down here, right? We just don't know. But as we go through those different levels and we start to understand better how price action is forming, how structure is forming, then what happens is all of a sudden I can find just a fantastic trade, like something that's just like, oh, this is a no-brainer. And so as I'm piling on the trades in account number one, I'm getting a test. So I don't know what that's all about. As I'm piling into trades in account number one, I'm also flipping over to account number two, and I'm taking that super high probability trade over there. And that's a no-brainer. If I was managing, if all my time and a focus was managing one account, I would not have the opportunity to take those like beautiful setup trades on that second account. Does that make sense? Furthermore, let's say that trading gets really bad, right? So I'm trading this full time. I'm in a drawdown. I get a marching market. This is beating me up, and I'm just like grinding it. Well, I've still got a backup account over here. So I can take a little bit of the pressure off of one account over here, and I can go trade futures in this other account. And because I've been fighting it so much over here, this trade's easy because I just have to go the other direction, right? So I can go back over here and have a nice backup. We talked a little bit about diversifying through brokerage. I can put a little bit of broker A, a little bit of broker B, a little bit of broker C. That helps. But another component to that is broker A may be really solid, they may have like the best liquidity in the euro, and broker B may have the best liquidity in the New Zealand the Kiwi, and broker C may have the best liquidity in I don't know, whatever, Australian. And so, if you traded Australian here, your costs would be higher, your spreads would be higher. And so it would make sense to trade more of your Australian dollars over here in C. So there's that difference. We can trade aggressively in one, moderate in another, and take long-term trades in another account. So that it just gives us a lot of ability to diversify what we're doing across our own. We can trade different instruments, futures, forex futures, stocks, options. We can position trade in one and we can hedge in another. So it just really opens up the world of possibilities. So over the weekend, it's interesting that Dave asked me to come and chat with you, because over the weekend I had a meeting with a fund that has seriously increased the amount of funds that they're managing in the recent weeks. And what they wanted to do is they wanted to build a new fund management structure. And so we were talking over the weekend I created this fund management system clear back in the 19 or in not 19 2000 or mid 2000s.
It
uh,
was 1949, we know.
1749, 1849. It was way back in 1849. But it's called the block. I call it the block bucket and barrel management system. So the concept here is that we take the entire portfolio and we divide it into blocks. So let's say, just for convenience sake, let's say that you've got a $10 million fund. We'll take that $10 million and we'll divide it into $500,000 blocks. And then we'll take that $500,000 block and we'll divide it into a bucket and a barrel. So the majority of that block gets put into the barrel. The smaller amount gets put into the bucket. And the barrel is managed through more of a traditional fund management structure. So you've got a model portfolio. You're going to allocate, 90% or 75% to growth. You're going to put 10% in fixed income. You're going to put so much into aggressive, whatever that is, whatever that model portfolio is. But it's managed through a typical standard, cut and dry model portfolio that's used by every fund management company on the planet. But then we have these bucket accounts. And so these bucket accounts are managed by traders or by algorithms or by something, some sort of a highly aggressive account. And then there's, technology that can copy that. So like, let's say that we've got a $500,000 block and we divide it up, and $400,000 goes into the barrel accounts, $100,000 goes into the bucket accounts. That money is managed here by a trader, and then that trader is distributing trades across other blocks or other sub accounts. And what this does is that we can now take a sub account and we could put a sub account on one broker, another sub account on a different broker, another sub account on a different broker. And so that trader is able to diversify that portfolio across different brokerages or different funded accounts. And so it gives us a lot of flexibility in how to manage the flow of money. Now, also, when I look at Trader B over here, I notice that Trader B's gotten into a bit of a funk. And so we can quickly scale down the amount of funds and the amount of risk that we're allocating to that trader and put it over into Trader A's hands or Trader B's hands. But this model is built so that it's very scalable, so that we're able to get super high results, super high returns out of the hands of these different traders or algorithms, things, but we don't want to put all of our eggs in those baskets, right? And so we've got another management. This is very similar to the way that I manage my personal assets. So, in addition to, having all of the money in market instruments, I'll also have a lot of that money in real estate or commodities, gold or silver, or currencies or something like that. But this is a model that is very, very, very effective at keeping money safe, not exposing it to institutional risk, not exposing it to liquidity problems. It's just a very sound process for managing money, and that's why this company is very interested in doing it. So all of that comes full circle, because what I want to do, traders, is I want to give you the opportunity to now manage multiple accounts. And so we'll keep the funded trading accounts as is. There's a very specific reason why we have those apiary funded accounts, because it's a learning process, right? And it's, the learning process is very important, if to your success in the market, right? And we walk you through some very real scenarios, and give you very real opportunities for trading and learning to develop your skills through the beeline funding process and so forth. But at the same time, you're going to have those drawdowns. And so what we wanted to do is I wanted to make sure that you had an ability to grow an account. So here, the growth of the account comes through consistency and consistently increasing your high water mark, right? With these growth accounts, all you have to do is focus on consistency. So you basically can get into a funded account or an unfunded account, and you have to prove that you can hit a certain return every month. It's not a huge return. It's not a little return. It's a very, very good return, right? But as you hit that month after month after month, we take care of the growth for you, right? So the accounts will grow 5,000, 7,500, 1,000, just like the Apiary Fund accounts over here. But instead of drawing that account down like you do over here, every month you have the ability to reset it. Every month that account will be reset back to your base funding level. So rather than drawing it down and then trying, working and scrimping and saving and working and trying to get it back up and then hit your mark, if you draw it down, you just start over again the next month. It's we just boost you right back up. Structurally, these accounts are structured differently than these accounts. Part of what allows us the ability to do this is that we're going to hold back the payouts. So you're in a funded account, you hit a 10% return. We're going to hold back that payout on that 10% return because we're going to use those funds to increase your account and to pay for the drawdowns until you get that account grown to the point where you are happy, right? Let's say you grow that account to a $25,000 account. You're happy with trading a $25,000 account. You say, I want to pull that. I want to stop doing the growth challenge and I will just want to trade a $25,000 account. Now you can trade a $25,000 account. So a very unique, different structure, different benefits, different way of looking at it, right? And I'm super excited because we're also going to introduce what we call the infinity accounts. And the infinity accounts are really unique. Instead of growing your account by hitting challenges and hitting a certain metric, what we're doing in the infinity accounts is basically, if you are able to accomplish something every week, something that progresses, as a group, we'll say, everybody, this week, we're going to deposit, $50 to your infinity account if you all place, 3 trades on Tuesday, right? Whatever it is. Not that that's going to move the needle and improve your trading, but we'll create different scenarios like that. And if you accomplish that, then the funds are going to be deposited into your account. And those are constantly, you're able to draw, if you draw it down, you can build it right back up again just by, accomplishing and completing a different challenge in that account. And then also in those infinity accounts, you're eligible for, I think the way that we've structured it, and don't quote me on this, but I think you're eligible for a payout if your account is over $1,000. So as long as your account's over $1,000, you're going to be eligible for a share of the payout in those infinity accounts. So here we're focusing on the educational and the development process. Here, we're focusing on growth. We really want to learn, we really want to help. These accounts are really designed to help you grow accounts to a level that you want without having the big drawdowns. And then these infinity accounts, these are designed to give you the ability to constantly have an opportunity to get a payout. And to grow those accounts to infinity, because you'll be able to constantly be depositing money into the account just by simply doing the whatever the challenge is that week or whatever. Those are in the spirit of trading multiple accounts. This is the structure that we're moving towards, and super excited for it. I'm excited for you because these are really unique. It's a really unique way of looking at the market and managing different accounts. So what questions do you have? Like, let's open it up. Dave, do you have some questions for me from?
Shawn, I did put a question out. Is there a cost associated with these accounts? For example, I think I know the growth and the Apiary, but the infinity account?
Yes.
And,
Yeah, good question. So yes, so Apiary Fund is not a broker, right? At a brokerage house, they make their money to cover all the cost of running all the software and all of the, there's an enormous amount of data flow back and forth. Every megabyte of data or kilobyte of data costs us money, right? That flows back and forth between your accounts. So at a brokerage house, they make up their cost. They cover their cost by the commission. We don't charge a commission because we're not a brokerage. And so the only way that we can cover the costs of these accounts is by charging us a monthly technology fee. So the way that we'll structure it is for any funded account that you have, that'll just be a base technology fee for that particular account. So probably somewhere around the $50 mark, because that seems to be the we have hard costs, like rigid hard costs, licensing fees and stuff like that, of about $23 per account. And then on top of that, we have the technology costs that runs anywhere, depends on how active you are, but so pricing those accounts right around $50 seems to be about that would keep us in business without putting us under. So
I think that answers Joseph's question. He says, what's the cost? But Sky has a question. Will Alveo, can you have multiple sessions of Alveo open, or is that something that you want to have?
We ultimately, we hope to be able to, there's some tricks, there's some challenges with having multiple accounts open in Alveo, but you will be able to have multiple funded accounts. You just go up into the upper left hand or upper right hand corner and swap your funded account to the other funded account. So you can swap back and forth that way. I know that's a little slow. That process is slow because we have to shut down, transition risk management over to the servers, and then pull up the new account. We'll try and speed that transition up. You can have multiple growth challenge accounts, but you will need to have you'll have to set up multiple emails in order to do that. So right now, only one per email, but multiple. For each email, you can have an Apiary Fund account, a growth account, and an Infinity account.
So they're asking, how do you sign up for an Affinity account?
Oh, we're not there yet. Sorry, I'm introducing this very early. We're
thanks for that,
in
by the way.
development. Sorry, guys. That is still in development. I need to make that clear. We're still working on that, and it's really going to be a cool concept. A cool account, though. I'm really excited about it.
Yeah. So we obviously have had this one forever. We just introduced this one within the past year. and we're working on this one. So hopefully this year we'll have all 3 of these accounts, which is a great um, reason why I wanted Shawn to talk about having, different accounts and managing different accounts. Because if you're not doing it, you should be, right? Through this presentation, it's just good, proper risk management. And it's one of the things that we wanted to kind of bring to you guys, is having multiple accounts that you have stewardship over.
I do have a question.
Is that Josh?
No.
It's
Josh on speech.
So,
Yeah.
I mean, first off, guys, this is amazing what y'all have set up here. And, I've traded quite a few prop firms, 100,000 accounts, etc. And the education and structure to grow and still support us as traders that Apiary has is bar none the best in the industry. But if I can bring, I'm trying to bring what you presented down to my level, right?
Mhm.
Can you dummy down in terms to help me understand how I can use all that information you just gave to trade 2 or 3 $5,000 accounts every day and make consistent money monthly? Is that scalable to that?
Yeah, for sure. In fact, that's, so I would hope that from this discussion, there are some significant advantages to being able to trade multiple accounts. I think that concept's understood. From a return perspective, there's some advantages to it as well, because so the concept of being able to have like that side account that you're only throwing the really good trades in, that is super powerful. Like there have been days where I've been grinding it out in one account, and I'm super happy at the end of the day because I made all this money in that account, right? But then I go and look at that other account that I've just been throwing like the cherry trades in, and I'm like, oh my gosh, I didn't even work in that account. I just threw a couple of trades here and there, and the returns are better over there than they are in my grinding account. And so if I was making my money, trading different challenge accounts out there, or trading multiple Apiary Fund accounts or something like that, I would definitely, as a rule, I would probably want 2 or 3 at a minimum of those accounts, because it will give you the ability to, if you have a drawdown here, you have these accounts that you have the ability to make that up. Whereas if you have the drawdown and you don't have that ability, you lose precious time, and you lose the ability to, you lose your leverage as well through that process. I hope that makes sense, Josh.
It does. So just, I guess, to pare it back, kind of what I heard for understanding, because one of the difficulties I had last month was time. And that was a rut, and you only have so much time in the morning, or I do, to read, to be in a market that I can read well enough to make money. Mm-hmm. So I pretty much focused on one strategy type on one account and left the other 2 accounts bare to rot, right? They didn't do much, except I got to trade it maybe 2 or 3 times. But what you're saying is capitalize on your other accounts with high probability trade, your cherry pickers. Mm-hmm. And now that doesn't necessarily have to be the same strategy, right? It doesn't have to be wobble. That could be some other strategy that you put over there, maybe a longer term or something else, but you're still trading it. You're diversifying not only your risk, but your strategies as well.
Exactly. And you can throw, position, you can, so think of Nate, how Nate likes to, Nate will wobble, and then he gets into a position and then he'll just hold it, right?
Yeah.
Walk away from it. I'm like, how will you ever do that, Nate? Well, you can do that here. So you can do you've got your primary account, you're giving it a ton of focus, a ton of attention, a ton of energy. And then meanwhile, you're setting up for those longer term moves with bigger lot sizes, and you can just let that thing run. And of course, you know what's happening over there because you're in the thick of it right here. And so as you start to see, developmental changes in the structure of the market, just simply go back and make those adjustments in that other account.
So your thinking is not the account I'm trading right now, I need to make this paycheck today, 1%, whatever. Your thinking is, okay, I'm trading. I've got 3 accounts to manage. I've got a month to deal with this and to move your profits and your risk and your strategies across the accounts, across the time of the month.
Yeah. That's a great way to look at it. And think about it in like terms of a stock portfolio, right? So most stock portfolios aren't focused on a single stock. Most stock portfolios, they'll trade, a basket of them, 10, 12 different stock, but they're holding it onto some. Some are getting a lot of attention, others are not. We're doing the same thing, only instead of, managing a portfolio of 10 different stocks, we're managing a portfolio of 5 different accounts or 3 different accounts. And I know it sounds like I'm afraid that it sounds like overwhelming and a lot of work, but it really isn't. Like stock traders do this all the time, right? They're managing multiple stocks. So just substitute the word stock for account.
Oh, this was really helpful. Thank you.
Yeah. What else?
There's a couple of other questions here. It's one was well, I guess the comments, really good comments. So Jerry was just saying, like, to echo what you were saying, is wobble a loan account, try to use Kevin's strategy in another, Shawn's strategy in one, and then see who wins. No, just kidding. The winner will be you as the trader. Let's see here. Sorry, my computer just popped out and changed the view on me. Say you have a growth account. Bill asked if in the growth account question, if we reach for the example that you used was 25,000, you're not interested in continuing that journey, will you still have to meet the 10% before you can get a payout or of anything above the 10%? And I think I know what your question is. But does that, and he follows up with that, does that question make sense? So do you understand that? Yeah.
I think it makes sense. So
Right.
Think of it as a ladder. You're climbing the growth ladder, right? You're going from 5,000 to 75 to 10 to 15 to 20, and you finally reach a rung on that ladder. To get up to the next rung, it's going to cost, basically you have to hit that 10%. And so you're saying, no, I'm comfortable. I like this level. So you basically, now you exit the ladder and you say, now this is just a regular old funded account. And if you don't have to hit 10% to get payout. Whatever positive you make in that account, you get paid out on it. It will have the high water mark. So you'll grow it to that level. And then if you draw it down, you'll still have to deal with the high water mark. And I haven't figured out if I want to let you come back onto the ladder. So I'm gonna be watching the data to help me understand if it puts us into a bad losing, or if it puts us into a bad spot, to give you that ability to flip back over onto the ladder. I just don't know the answer to that at this point, but it's something that I'm watching the data on.
So Jerry asked the question, if you already have a funded account with Apiary, do you just switch over? And I'm not really sure if I understand what you mean by switching over.
If you have a funded account at Apiary, I recommend keeping it. It's a valuable asset.
Right?
And so I would recommend keeping it. If you don't want to trade it, that's fine, but keep it. There's no flipping an account, so you can't take an Apiary Fund account and flip it into a Growth Challenge account.
Right.
That doesn't make sense from the fund's perspective. But opening up a growth account, letting that grow, that while you trade an Apiary Fund account, that's totally cool. We're totally
Yeah.
good with that.
And I just want to make a clarifying point. Sean said this, but I just want to reiterate the point that we're now bringing you guys, multiple different funded accounts, and for each funded account that you would like, or different style or whatever that works for you, there will be a technology fee for each one of those accounts. Because Jerry, the next question he asked, so do I have to pay for another account? Yes, but you don't have to. Keyword is have to. You get to if you want to, but you don't have to. Right. And
Yeah.
so, and the advantage of having multiple accounts is, well, Shawn just talked about it. Right. And
I think
that-
Sky figured out how to raise his hand.
Okay, good.
Yeah, thanks. Hey, Shawn. First, Shawn, thanks for coming out tonight. We all appreciate it.
Oh, thanks.
I am thrilled with this idea. I already have 2 accounts, so I'm excited to get into that stuff. If I understand, one of the things that could work really well with this is that, like, for example, last night I was holding on to a long position. I didn't necessarily want to get out of it to trade in the morning, but I didn't want to get too confused with long and short-term trades in the same account. So I'm excited to have one where I can do long-term, one that I can short-term, one I can do higher risk, one I can do safer trades. But does the performance of one account, is that going to impact the other one, as far as, like, if I'm doing my morning trading more aggressive and I draw down like 5%, are they going to shut off my long term until the 5% gets better, or are they really 2 separate entities?
They're very, very much 2 separate entities. So you'll still be able to trade the other 2 accounts, no problem.
Right. Thank you.
Yep.
Good question.
That's a good question.
It's well worth raising your hand, Sky.
Yeah. Glad you figured it out.
Glenn asked, how high can the ladder go? And I don't think,
50.
well, not necessarily.
Well, I guess
Because what happens at the end of 50? You didn't even talk about that. That's the magic, right? That's when the magic happens.
I didn't talk about that. We are setting up relationships. I told you that I was out talking to a fund over the weekend. We are setting up relationships to help transition traders from these development. Like, our focus is at developing a trader. But what we want is, we want to have the next step for you as traders. So, like, we have the ability, we're starting to develop a network of funds out there that are happy to take the Apiary Fund traders, because they are awesome. They're awesome traders. And they love, oh man, I got to tell you just real quick, I was talking to a fund out of Canada, and this fund is just like, I gave him a track record from one of our traders. I was like, this is just a sample of what one of our traders has done. And he just like went off the charts. He's like, no way, no way, no way. Like, how do you, like, look at the volume of transactions he's had, look at the performance, look at the consistency. There's no way. This is like, you fabricated this. I'm like, no, this is legitimately a real trader. And he's like, what do I got to do to get this guy on my trading floor? So
That was Josh, right?
Yeah, that was Josh. How did you know, Sky?
He doesn't. He demos me for the other reason. Here's what we're working on.
So yeah, so we're working on developing those relationships, so you have a next step, right? So we will do what we do best, and that's develop successful traders. And then what we're going to do is create a funding opportunity for you to take those next steps into bigger and bigger account sizes and management. So
another question is, do you have any plans to open up other things other than currencies, other instruments?
Probably not right now. We step into a regulatory nightmare with the very second that we do that. So we will have to make sure that we do take that step at the right time, because it's a huge cost to jump into stocks or equities or futures for that matter. So, but there is plans, long-term plans to facilitate that.
And let's see.
Yeah, will Apiary Fund trade gold or silver again? I would like to. We talked about liquidity risk. I don't know when we pulled gold and silver from the fund, there was a significant, it was like one of the scariest things I've seen in the financial markets. The entire gold market was just hanging by a thread, like literally. There were cracks. It's like looking at looking at a huge dam, all the concrete and everything like that, and just seeing like shatter marks all through that dam. And I was like, the whole industry, the whole entire gold commodity sector was just ready to just get destroyed. And so that's why we pulled it. It scared me, I'll be honest. It scared me.
Larry asked a Series 7 question about regarding or requiring all the traders to be licensed.
Yeah, so that's some of the regulatory issues, dealing with stocks. Anytime that you're trading on behalf of another person, you have to be licensed in order to do it.
Mm-hmm.
There's some very gray area there, because technically you're just trading my money, and I'm very much considered exempt from I can give my money to anyone I want to trade it, because it doesn't matter.
And he does because Josh is trading his money.
Yeah.
So,
and Dad, you are
He just giving that stuff away.
He's just giving it away.
Ouch.
You guys, it's not very often that Shawn, is generous with his time, and that you guys are having just a Q&A session with him. You can ask him any questions, and you guys are missing like some of the big questions that you should ask him, like how in the heck do you get a beard like that? Like the important questions. Come on, guys, fire him at. He's not going to be here forever, but
Is there a place you can buy a hat like that?
Yes.
Yes.
There we go. Now we're getting into some serious questions here.
Apiaryfund.com.
Yeah.
Isn't
Merch.
that amazing?
Merch.
Here's one real question though. Say if we have a real account with Apiary, can we get promoted up at the same rate that someone would be with a challenge account? Because they get promoted pretty fast.
Yeah, that's a good question. So the growth accounts, the growth challenge accounts, they have there's a model behind it. So there's a reason why we're able to progress those accounts a little faster than we are through the trader on the street side. So unfortunately, because the trader on the street model is built differently, we wouldn't be able to graduate that. We still have to have those 3 months in between, where we don't have to on the growth challenge accounts, because we basically think of it like this: that 10% challenge, a lot of that is going back in to helping facilitate the drawdowns, the costs, and give us ability to speedily increase those account sizes. Does that make sense?
Does kind of. So would I be better off just switching totally over to a growth account and just letting go of my funded Apiary account?
I mean, you can do that, but why? I wouldn't. I'd rather have two personally.
Well, but to get promoted faster. I have to use the live account to pay my bills and survive. It doesn't get promoted as quickly. If I use the growth account, it gets promoted quickly, but I can't get paid in the meantime.
Right.
Yeah. So there's give and takes, but that's why having both of them is really good. And then having the third Infinity accounts, that's
where I'm excited. You're gonna love those Infinity accounts. Their design, the design on those is really cool.
So
would it make sense to trade two accounts in the exact same way? And could I trade them at the same time, or?
Yeah, you'll definitely get different results for sure. But yeah, I mean, yeah, I don't see a problem with that. It's
So I
really
open up two LVOs and do one in one and the other in the other, or how would that work?
do what now?
But I have to open up two instances of Alveo on two separate computers, or
Another thing we haven't, is another thing that's in the works is the ability to do a copy trade. So that's some software that we're developing right now.
yeah.
Just do one growth account, get all the way to the first funding call. When you get the first funding call, then do another growth account, get another funding call, and then get rid of the API.
So you could do that. You can have multiple growth accounts too, for sure.
Yeah.
There's a lot of different ways. And that's the fun part is like Shawn said this earlier, he's going to have to look at the data.
Mhm.
So, and this is a new experience that he's presenting to you guys. How you guys use it, we'll start to learn how it's being utilized, right? And then we'll make changes as he recognizes the data, and to obviously he knows how to manage risk, and he's not going to ever let anything be too risky for you or for him, right? And so
we really want to make sure that the fund is still there.
yeah. So I guess Josh can't trade.
So, help me understand a little bit though. If somebody does perfectly, how quickly can they get promoted up to a real 50K account? Is it month by month they have to get 10%?
Yeah. So how many months is that, David? 10 months, 5 months?
Six. There's 6 stages.
6 stages.
Okay.
And each one of them comes with a psychological thing. So it's like the 6 stages of grief, you know?
Gotcha.
Yeah. But if you look, Doug, great question. And I think the best way to explain it is like, if you look at like how Shawn was saying, they're just handled with different risk levels. So if you think it is like this money for the growth challenges in a different risk bucket than a apiary bucket, and then there's another bucket for the infinity accounts, right?
Oh, I can dig it. I'm just thinking, what's the easiest way from point A to point B?
But
In the meantime, so I can like pay the people who want to get their paid bills.
No, don't worry about that.
But okay, in 6 months I could get 2 raises at least, and that that would bring me up fairly high. So it's almost even, Steven.
But
I'll
great
discuss
question.
it with Ron, because it seems like it's fairly close to even, Steven. If I get 2 more raises, I would be in fair shape.
Yeah, it's not, we're trying really hard not to, I can, again, Shawn can speak to this, but not to have one advantage over the other, right? And I would probably emphatically say that the Beeline account is there for brand new traders. Like if you've never placed a trade in your life, you probably shouldn't go on, you shouldn't do the growth challenge. Right?
Doesn't make sense.
It doesn't make sense, right? But the other thing that is a really good question that Josh asks is he talks about, which some of you guys may or may not know, and I don't really want to open up a can of going into another discussion. You'll learn this as you go through the growth challenge webinar that I put together, because we talk about it in there, but it's the Sharpe ratio that he asked about. And I'm just going to quickly get a definition of a Sharpe ratio. Is every single trader has one. And it's basically Shawn's way of knowing how good you are against your peers that are trading the same fund. And so with that definition, Josh asked the question, do you have one Sharpe ratio? Is that per trader, or is that per account?
It's per account. Yeah, that's per account. Each account will have its own Sharpe ratio.
Okay. Question is the interval for the Sharpe ratio, is it once per day when it takes you know what I mean?
Yes, it is.
Yeah, it once per, okay, it's your daily trade.
Yeah, we're not going trade by trade. No,
okay, good. It would make a difference how large you enter in, and that would
we might bring down Amazon.
What are you using for the free rate, Shawn?
Say again.
What are you using for the free rate?
We're using a basket of traders at Apiary Fund and their performance. That's what we're measuring against.
So if you guys don't know what, like I said, it opens up a whole or a can of worms, a Sharpe ratio. So I'd really, if this is something like what's that? Watch the subscribe to the schedule the growth challenge webinar, because we go into all that, right? But it's something that's really cool that Shawn has had forever. and now he's going to be bringing that to the forefront, and hopefully at some point you'll know exactly what your number is, right? And that's something that he's working on, right?
It's
And
a
you can,
question I had asked earlier in the chat about how you structure your this business where you're going to generate all of this wealth with this growth account and the LVO account. Is how do you set yourself up as become a professional trader, and what type of structure? Could we get some mentorship on that?
you
Build
talking
our-
like a tax shelter, tax stuff like that? Because that,
Yes, some ideas of how not necessarily tax advice, but this is how you should structure your business to avoid problems.
It's a great question, and we actually have Tony Dixon. Tony Dixon is one of the crew instructors here, and his entire life is dedicated to building that structure and or helping us understand what that structure looks like. So there's some favorable tax laws for trader businesses. And so he can kind of explain how that structure works. We just need to get him on another call and do another class. So it's a great question. And by the way, like if you think about it, we're like my goal is like let me think how to say this. Like Apiary Fund, in the beginning, when I first started Apiary Fund, I wanted to just be like the end all be all. You come in, you trade your way up, you get your funding, you live here for life, and we just keep growing it. But I'm realizing, the longer we get into this, that that it's better to identify your niche and be really good at your niche, right? And the niche that we're really good at is taking someone from relatively brand new and developing them into a very capable trader. And we're really good at it. Like we've proven it time after time after time after time. But that's not the end of the journey. And there's much better income and much better opportunities once you're at that level. And my goal has kind of shifted now to where, like, I want to be able to hand you off into a much better situation than even I could provide. And so, Alfred, to your comment, part of that's going to be providing you with some guidance on structure. How do you build out your entities? How do you build your business around it? Some of that's going to be around, funding. Can I, do you have the track record and the Sharpe ratios, all of the statistics? Do you have those statistics to be able to perform at a semi-pro level, right? You could be trading a $500,000 account, and you could be getting, that could be life-changing for you. Where I can't provide that. I can't provide $500,000 because I got so many people that are coming in that, at the smaller amounts, that I have to be able to provide that money for them. So anyway, it's just like, I really, really, truly want to see each one of you be able to take that next step. We'll get you to the point where you can trade successfully, but then what? I want to make sure that we got you good. We got you covered there, Alfred.
Oh, that sounds great. I'd like to see a LVO ETF fund. I'd invest in it.
I love it. What else do we got, David?
Oh, Blue Rabbit wants to know what your Sharpe ratio is, Shawn. Just kidding. I'm sure we all would. What is it? It's 5.
It's 42.
42.
Infinity and
See,
beyond.
that's where you
Infinity
get
and beyond.
that's where you get the infinity accounts from. That's his he's a nice connection. Catherine, you asked when would be the webinar challenges or replay? I'm not sure. You'd have to.
The classes for the challenges, Catherine, is that what you're asking? The
Okay.
strategies. So as a general rule, we're doing the classes on Tuesday night at 7 Mountain Time, 7 p.m. Mountain Time on Tuesdays. And then I think David's got we've got some technology that we're going to be putting in place to get all of the reruns
Replays.
back out to you.
Yeah. Reruns. I think, yeah.
John, is it time to launch your own streaming service that we can like see on our smart TVs for $99 a month?
Yes, it's coming to a device near you.
Shawn Lucas Plus, now only $9.99.
It's better than Disney Plus.
That would be the most boring stream.
Because Shawn is very family friendly.
What platform are those Tuesday night challenges on?
So that's the thing. We're still working on technology, and there's so many new things that we're trying to build and come out to you, and that I don't want to confuse the message here. So I'm really trying to not go this way and just keep it focused on, but we are bringing a lot of new things out. And so keep in. And so the fastest way for me to get information out to everybody has been through Discord, because I can whip it out and every morning when we trade, we have different products we have that we're bringing to you guys. Don't really want to get into it, but we're building a new website that this is where all of that will live under, right? And the infinity accounts, growth challenge, all that kind of stuff. And so again, without kind of pulling back the curtain too much and diverting attention away from the real topic tonight, was how to trade multiple accounts, because it's my belief and that everybody should have multiple funded accounts. And like Shawn says, if you have a $50,000 account you're trading here, $50,000 account you're trading here, and a $50,000 account you're trading here, well, two of those accounts might just save your day. Well, and one might be bad, but combined, you might have a great day of trading, right? And that's the diversification of risk that we're trying to empower you guys to see that, oh, I get it now, right? Not having all your eggs in one basket is actually a good thing, right? And to have multiple trading accounts will just, and it wasn't until recently, I think I was sharing this with everybody, it wasn't until recently that my aha moment came when I was talking with Shawn about that. And I'm like, multiple accounts. He's like, well, that's what I do. I do that every day. And I'm like, oh yeah, well, I mean, I knew that. I just never, and I'm like, we really should tell the community, right? And that's where this kind of conversation led to this presentation, was that if you're not having multiple accounts, get them, because it'll just protect you from bad trading days, right? But good questions from everybody, and as we bring new things to you guys, we'll have more of these type of meetings and every single Wednesday night we do have these trainings, but it's not from Shawn, it's not from me. I let you guys do the trainings, and so this is just a break in that path. And definitely whenever Shawn wants to talk, I guess we'll let him. Who am I to say no?
No, I appreciate the opportunity to come and chat with you tonight. It's been fun. It's kind of casual night. But I've enjoyed it. So just let me just end with this. Part of what makes me calm and collected when I'm trading and I'm, struggling and drawdowns and whatever is that I know that I've got something else I can lean on. Like at the end of the day, if I have to, I know that I've got something else I can lean on. And that's super empowering. Like when you're really struggling through those accounts, like, yeah, so I take a 5% hit on this. If I have to, I can go trade something else and I can make my money for the day. And it's super, it helps up here, right? More than anything. There's a lot of benefits that like we talked about: liquidity, institutional risk, diversification, hedge abilities, there's a lot of unique benefits to being able to trade multiple accounts. But at the end of the day, it's the peace of mind that really matters, and being able to execute, today, tomorrow, the next day. And that's really the ultimate advantage. So,
Absolutely.
Cool.
Appreciate it. Well, I'd like to thank Shawn for giving of his evening tonight. And I'd like to thank you guys for, some of you guys are well into the evening tonight. So
yeah. Thank you, traders. Great to be with you tonight.
Thanks, Shawn.
Then I appreciate it. And for those of you guys who are in the hot seat, we're going to be trading with referee Pete tomorrow morning.
Oh, Pete.
So join on in on that. You're going to be showing us how it's done tomorrow morning. So you're
Proper
excited
trade
about that.
placement.
Are you going to
Pete.
unmute him this time?
Okay, Pete, you can talk.
All I gotta say is I'm sitting in Florida, so it's almost midnight. I don't know the last time I've been up since midnight.
And you got to get up early to trade, boy. So get some sleep, because we're gonna put you through the ringer tomorrow. I'm excited, referee Pete.
Right on.
Proper
About 9 hours.
PTPs.
Yeah, you know me.
Awesome.
All right, guys, we'll see you in the morning.
Shawn.
And
Thanks, Dave.
and
Thank
you,
you,
guys.
Shawn.
Thank you both.
Thanks, Shawn.
Appreciate you.
Thank you,
Bye.
David. Keep it real.
Thank you, Shawn.